complete washdown, because the Indian legal system requires that for any mortgage to be created, any mortgage document to be signed, there has to be what is called a physical signature, a wet signature. Now, during the period of the pandemic, obviously, and during the period of the lockdown, there was obviously no possibility of getting a wet signature. So April was a complete washout. We did just about 500 crores of disbursements during that month. Offices started opening for us in the middle of May. Selectively, some offices were opened on the 15th of May, some on the 22nd, some in early June, some on the 8th of June. And we started seeing a pickup in disbursements. We disbursed about 2,300 crore rupees worth of loans in the month of May. And then in June, we saw a more number of offices being opened. Mumbai, for example, was allowed to be opened from the 8th of June. So we started seeing a much bigger growth rate coming in from June. So for the month of June, we did about 68% in terms of retail business of what we would normally have done. The good part is that with every passing day, what we have seen is that the demand, the disbursements that we are making is increasing day by day. Every month has been better than the earlier month. July, to my mind, will be better than June. The indications we have had till now would indicate that July will be over 70% of our normal disbursements, about 71, 72% of our normal disbursements. So things are beginning to pick up. But coming back specifically to the first quarter, as I said, June, we did 68% of what we would normally have done. And for the first quarter, our total disbursements, including individuals and non-individuals, aggregated to about 71% of what we had done in the previous year. We used the opportunity to identify very good AAA corporates and lent money to these companies for relatively short periods of time. Our loan book growth on an AUM basis was at 12%. Of that 12% growth, the growth in individual business was 11% on an AUM basis. During the quarter, we sold loans aggregating to 1,376 crores. And during the last 12 months, we sold loans aggregating in all to 18,273 crores. Had these loans not been sold, had we not sold the 1,376 crores of loans in the first quarter, then the growth in the loan book pre-sale for individuals would have been 17%, and in the aggregate would have been 16%. We have a total of 65,695 crore rupees worth of loans, which have been sold by us, but which we continue to service. So when you look at our AUM is a combination of loans outstanding in the books, plus the 65,000 crores of loans, which we continue to service and which have been sold by us. Our thrust on affordable housing has continued unabated. During the quarter, 37% of the loans we did in terms of numbers and 19% of the loans we did in terms of value terms were to customers who were either in the economically weaker section or in the lower income group. Our average loan amount for customers in the economically weaker section was 10.5 lakhs of rupees, and average loan amount for customers in the lower income group was 17.8 lakhs of rupees. The total average loan for the quarter was 24.6%, which is actually a reduction from what it used to be the previous year. Traditionally, our average loan amount last year was about 27 lakhs. First quarter of this year was 24.6 lakhs. And this is a reflection of the fact that in the big cities like Mumbai and Delhi, primarily Mumbai and Delhi, offices were opened relatively late. As I said, Mumbai offices were opened only in the 8th of June. So therefore, I would presume, see a larger amount of loans coming from these places in the months ahead. And therefore, the average loan amount should increase as we go forward. If you look at the breakup of our loans on a balance sheet basis, 74% of our loans are to individuals, 11% are construction finance loans, 9% are lease rental discounting loans, and 6% are corporate loans. So our focus continues to, on a balance sheet basis, continues to be on retail loans. We continue to hold all our investments in the balance sheet at the historical cost and not at fair value. The unrealized gain, the unaccounted gain on our listed investments stands at 1,92,151 crores. So in addition to the net worth that we carry in the books, we also had an unrecognized gain of which if we include as part of the net worth of the company would be much higher. Our capital adequacy ratio stood at 17.3%. Of that 17.3%, 16.2% was Tier 1 capital and 1.1% was Tier 2 capital. Non-performing loans came down a little bit during the quarter. As of March 31st, 2020, our gross non-performing loan was 1.99%, and on 30th June, the gross non-performing loan was 1.87%. If you break up the non-performing loans between retail and non-retail, which is individuals and non-individuals, individual gross non-performing loan came down slightly during the quarter from 0.95% to 0.92%, and in the non-individual category, non-performing loans came down from 4.71% to 4.10%. We continue to be extremely proactive in terms of provisioning, and we have charged a profit and loss account with a provisioning of as much as 1,199 crores of rupees, which includes a special provisioning that we have done for keeping in mind the COVID situation. As of 30th of June, we had a total provision of 916 crores, specifically taking into account the COVID situation. On 30th of June, we had a total provision of 12,285 crores in the balance sheet, which is higher by 7,833 crores compared to what we would be required to provide had we gone strictly by the regulations that are prevalent. Net interest income for the quarter stood at 3,000, and this is only interest, that is interest income minus interest expenses. It stood at 3,392 crores for the quarter, compared to 3,079 crores in the previous year's first quarter, giving an increase of 10%. However, this 10% is not the right way to look at it. During the course of this quarter, taking into account the pandemic, taking into account the uncertainties which we thought would prevail in the market, we kept a significantly higher level of liquidity than what we normally do. So during the first quarter, we had a liquidity level of, on an average, of 31,962 crores of rupees compared to a significantly lower level in the previous year. If we adjust for that, and if we adjust for the fact that during the quarter ended March, we had invested money in our subsidiaries, we bought over Apollo Munich Health, and we also invested money in Credila. If we adjust for that, the increase in the net interest income would have been 17%. During the quarter, we sold a lesser proportion of loans than what we had done in the previous year. Our total loans sold during the quarter was 1,376 crores of rupees compared to 7,000 crores plus in the first quarter of last year. And accordingly, as I've explained in the past, under Indian accounting standards, when you sell a loan, you have to account for the future income on those loans upfront. So because of the lower level of sales in the current year's first quarter, we have accounted for a lower level of securitization income at 183 crores in the current year. If we include the securitization income, then the net interest income for the quarter would be 3,576 crores compared to 3,375 crores. Net interest margin for the quarter stood at 3.1%, but this 3.1% is again not strictly comparable with the previous year because of the high level of liquidity we carry and the negative spread that we earn on that liquidity. If we adjust for the high level of liquidity, the 32,000 crores of liquidity, and the negative carry on that, the net interest margin for the quarter would be 3.3%, same as what it was in the previous year. This quarter, we have sold less, we booked less profit on sale of investments than we had done in the first quarter of last year. Last year, in the first quarter, we had booked the total profit on sale of investment of 1,894 crores. In the first quarter of this year, we have booked a total profit of 1,241 crores. After taking into account the above, the profit before tax for the quarter stood at 3,607 crores compared to 3,985 crores in the previous year. However, if we adjust for the lower level of profit on sale of investments in the current quarter, If we adjust for the higher amount of provisioning that we've done in the current quarter, taking into account the COVID situation, and for the negative carry on the excess liquidity we carry, as also for the fact that we received more dividend income this year than last year, before tax for the quarter would have been 3,447 crores compared to 2,980 crores in the previous year, giving an increase of 16%. Tax for the quarter was 555 crores compared to 782 crores in the previous year. And on a post-tax basis, our profit for the quarter was 3,052 crores compared to 3,203 crores in the previous year. Total comprehensive income stood at 5,070 crores compared to 3,465 crores in the previous year. And on a consolidated basis, our profit after tax for the quarter stood at 4,059 crores compared to 3,540 crores in the previous year, giving an increase of 15%. As you know, RBI required us to provide a moratorium to our customers. We offered the moratorium to every single customer of ours. In the first round of the moratorium, which was for March, April, and May of this year, we had a total of 22.6% of our customers in value terms, retail customers in value terms who availed of the moratorium, and in the aggregate, it was 27% of the customers availed of the moratorium. That number has come down to 16.6% in the second phase for individuals and 22.4% in the aggregate for all customers put together. As far as provisioning is concerned, my sense is that we are done with the high levels of provisioning we were carrying. To my mind, I don't think we would need to make further provisioning for COVID in the quarters ahead. So that was a very short presentation on what we had in the accounts. We have had a few questions from the media, so maybe I can look at answering some of these questions. Outlook on home loan growth going forward. Or will there be a big push towards EWS, LIG segment compared to the previous year? Well, my outlook for home loan growth is, as I said earlier, we are seeing that with every passing day, the demand for housing is increasing. Our disbursements are increasing day by day. What we disbursed in July will be more than June. What we disbursed in June, as I said, was 6,600 crores compared to just 2,300 crores in May. So I think we have come back. It will take some time for us to come back to complete normalcy, but I would expect that with every passing quarter, the amount that we disperse will be more than what we have dispersed in the previous quarter. And if that sort of trend continues and if all goes well, I would believe that by the time we come to the January to March quarter, which is the fourth quarter of the financial year, we should be close to about 90-95% normalcy. Will there be a big push towards EWS, LIG segment? Yes, there is always. We do a lot of affordable housing loans. I mentioned in my talk that 37% of the customers who took loans in this quarter were people who were either in the economically weaker section or in the lower income group. And in terms of value, that is 19%. So that trust will very much continue. What is the outlook on interest rates going forward? My sense is in the short term, RBI will have to maintain a close balance between the inflationary pressures and the need to keep reducing rates. I would say that there is a chance that we could see another 0.25% reduction in interest rates, but I personally do not see any significant further reduction in interest rates thereafter. Why do people take moratoriums? Well, the reasons for people taking moratoriums are many. Job losses have fortunately not been too many. If we were to look at a book, about 0.7% of our customers have suffered job losses, so it's less than 1%. A lot of them have really given no specific reason. They've had no job losses, they've had no salary cuts, they've not faced any business shutdown or any business losses, but still they have availed of a moratorium because they just wanted to stay liquid at that point. So job losses is 0.7%. About 6% of our customers have suffered some degree of salary cuts. They may not be significant, but some degree of salary cuts. And roughly about 6% of our customers have faced some degree of problems with their jobs. And the rest of it would be people have really given no reason why they've availed of a moratorium. They just said they want to be more cautious. They want to sit on more cash at a time like this. And the total individual moratoriums total individual loans on which moratorium has been sought has been 16.6%. Balance sheet is fully protected. COVID-related defaults, yes, I would certainly think so. I think the balance sheet is, to my mind, fully protected against any COVID-related defaults by virtue of the fact that we have historically built up a huge level of provisioning. And as I said earlier, I do not think that going forward, we will need to make too much of additional provisioning in respect of COVID. How has the demand for commercial real estate panned out this year? What is the percentage in your books has changed from last year? Well, commercial real estate, as in if you look at the three categories of loans that we have in the non-individual category, developer funding was 11% of our total lending last year. It continues to be 11% of our total lending currently. Lease rental discounting was 8%. It has now moved up to 9%. And corporate loans was 4%, which has moved up to 5%. So we have seen some degree of demand for loans from the non-individual category. Outlook for asset quality. Well, I remain fairly confident. First of all, if I go back to historical times, if I go back to the last 20 years, we have at different points of time in history seen some degree of economic stress coming in the economy. 1992. I think it was 96, 97, 2002, 3, 2008, 9. And generally, we found that during the period of distress, NPLs do tend to move up a little bit. But generally, again, what we found is once the crisis is behind us, once the economy gets back to some degree of normalcy, NPLs usually come back to the levels that used to prevail before the crisis happened. I would expect that something similar would happen even in the current year. In the very short term, NPL, it is difficult to predict what NPL numbers would be. I do not see too much of an increase in the level of NPLs, but we need to be cautious on that. But going forward, as we finish the financial year, and as we get to, as per my expectation, almost 100% normalcy by next year, I would expect NPLs to come back to the levels that they were pre-COVID. Do you think housing demand will be impacted due to COVID? Yes, in the short term, it might be impacted. But as I said earlier, we are clearly seeing signs which show that with every passing day, the demand for housing is increasing, as I said, on a day-to-day basis. So I would hope that that kind of trend will continue going forward. Retail loans under moratorium are still at a higher level. What is expected risk from the portfolio? See, what we have to understand here is that retail loans constitute that the people who have sought moratorium in respect of individual loans is 16.6%. And as I said, many of them have said that they've not suffered job losses, they've not suffered salary cuts, but they just want to be safe at a time like that. My sense is I remain very optimistic on recovery for individual loans for a variety of factors. One is what we finance is a house. It's the place where the family stays. So people would generally not do anything which would jeopardize the ownership of that property. That is number one. Number two, in most of our loans, we have both husband and wife who have joined as co-borrowers. So theoretically, one of them is facing some difficulty with their job or with their salaries, then the other person can take over the mantle of servicing them. Thirdly, our average loan-to-value ratio at inception is extremely low. At origination, we finance about 67 to 68% of the value of the property. All our loans are repaid through equated monthly installments, which starts the moment the loan is fully disbursed. So with every passing month, the outstanding amount of the loan keeps declining, and therefore the loan-to-value ratio will also keep declining, and the individual's equity in the property will keep increasing. Lastly, as you know, foreclosure laws are possible in India. We go through a foreclosure process. It typically takes about 9 to 12 months to foreclose a loan. And because at that time, the average equity that the individual has in the property is so high, we would almost in every instance or in most instances recover not just the principal but interest. We, of course, do not resort to a foreclosure at the slightest degree of default, we would try to give the individual time to make payment, but we also have at the back of our mind the fact that it is possible to foreclose the loan and recover our money. So I don't expect too much of a concern, particularly on the individual non-performing loan level. On the developer levels, we continue to remain cautious, but what we've done is in every single loan that we have to a developer, we have looked at the outstanding, we've looked at the stage of the project, and wherever we saw the slightest degree of risk, we've gone and made provisions on those. So on 31st of March, 30th of June, for example, is 7,800 crores more than what we are required to carry by regulation. On the disbursement front, do you see any pickup in demand? Yes, we are seeing pickup in demand. I mentioned that clearly. What category has shown an improvement is largely the middle income housing, which is seeing an improvement. The high-end market continues to remain slow. Will you keep making provisioning at these elevated levels in the upcoming quarters? No, I do not think we will need to make provisioning at these elevated levels going forward. We made what we believe is adequate provisioning or more than adequate provisioning, taking into account the COVID situation as things stand today. Non-individual loan growth, I don't think there's anything else. So I think I've answered most of the questions that were given to me. If there are any further questions, please do let us know and we'd be happy to answer that. Thank you very much.